Hey guys, it's Steven. Got a weekly pivot chart update for the Bytes token. And just to start off, we left off about 5 days ago at the end of the March 2nd here. And as you can see for this week, this pivot chart played out very well. We started off right at the weekly central pivot, found support, and then all the way up to the resistance one, found resistance, and then we came right back down to the central pivot. So the central pivot tends to act as a magnet for the token. You've seen this many times before, and unless we have these huge drawdowns, but generally speaking, that's a very good indication of, you have these buy and sell indicators basically. Obviously anything can happen, but it's just good to measure these moves here. So yeah, so I went ahead and took the highs that we had here and the low and the close. And if you guys can go ahead and check it out here, these are the numbers that I used. And so this is where I got the support. So the first support here is at 980. And so there's a possibility we can come down and touch that. And then we got the central pivot at $14. And then we have the first resistance at 16.5. Let me double check that, 16.5, 980. Yep, looks good. So yeah, we'll see what happens. Let's just go ahead and get into my position. So when we left off the other day, what I did was I ended up selling this peak because we were at resistance here and I just want to take profit. So I sold all my bytes. And for me, this is kind of like a hedge. It's like a conservative play on Bytes because Bytes was at a pretty decent number, like 16 to $18 is a pretty good number for me. So I'm happy with that. So I went ahead and sold all my Bytes. And what I did was I went ahead and created a liquidity pool in this position here. Is pretty aggressive. I think it was from 57 to 55, right in this range. It was a little bit too aggressive, but the way I look at it is I took my profits here and then now I can conservatively put those profits that I took back to work to basically accumulate more bytes at a cheaper price. So it's just a strategy that I'm trying to implement. So obviously the better position would have been, instead of being so short-sighted here, make it a more longer range down to the central pivot, because this is obviously where the price could have gone. So I was a little too aggressive with that, and I could have got obviously a better fill on the amount of tokens that I bought as it goes down. Instead of buying all my tokens here, I could have bought more at cheaper prices. So overall, I did have a decent amount of fees, maybe 400 or 500 in fees, but I lost more on impermanent loss. So just something to take into account. And after I went ahead and closed that position that was up here in this 0.0055 to 57, I went ahead and opened up a position about 4 days ago. And let's just go ahead and check on it. So you can see the position's been open for 4 days. Overall, the total return has been 13.4%. And I chose a range of 45 to 47. And so far, pretty good on the total fees. And yeah, the APR looks good. So I guess my thinking when this happened was I wanted to be as close to this pivot as possible. So basically, if it goes above, that's okay. And if it goes below, I want to have my allocation of bytes. So kind of playing off of this pivot a bit, but not as a little bit, basically just a really aggressive way to do it. I could have been more aggressive and made a larger range and probably had the same results as far as returns, because I would have got some of this too. But this gives me a better entry, right? If I'm providing liquidity from 47 to 45, I'm getting a better buy price if it goes up and down. So just wanted to point that out. And I went ahead and created this week's pivot chart. And as you can see, we're moving very nicely towards this central pivot. So as of right now, I'm just going to leave this position. And I have been taking out some profits overall in the markets, and that includes my liquidity position. So they're not as high right now, but I do have some money that I could put back in. So strategy wise, I could be possibly waiting to buy this dip here. because I do have some cash on the outside. And then for now, I'm just going to let this work, and hopefully we can get some more volume in this spot here. Otherwise, we'll just buy this dip with what funds I have left. And yeah, I guess nothing really else to go over that. So let's just go ahead and check the volume. The volume's been super low. So yes, not even 1,000 today, 100,000. So it's been pretty slow. We need to get back up into these $1 million days. That's what we're looking for as liquidity providers. And we'll go ahead and check out this liquidity chart, and it'll kind of explain why we have this dip and actually why we could actually see a more of a dip. So there's just not much to buy right now. So 0.85 ETH. So not even $3,000 worth of liquidity. So that could definitely go through pretty quick as far as sell orders. So I guess the big brain play would that be to have some Ethereum here to buy this dip and get some of that volume. So we'll see that the gas is pretty cheap right now. So I might start changing some things around here and be a little bit more aggressive. And I will let you guys know how that goes. And yeah, I missed a few days here, but overall about steady. We are still moving down over the past 4 or 5 days here. Holders are down, and token supply is up only 4,700 over the past 4 days here. So not too bad. Market cap down. So yeah, we'll keep an eye on that. And then just to finish off how I'm looking at the overall market, I am I would say selfishly bearish here. So we left off on the I think, yeah, the second here is the first second. So unfortunately, I missed the opportunity to go ahead and set up this monthly pivot before. I probably, if I would have saw this, I would have been like, okay, we're basically at resistance and we can go ahead and test this lower range here. So I wasn't too keen to exactly say that was going to happen. I said it could have gone anyway. But yeah, I missed the opportunity to go ahead and create the month's pivot right here on the second, but I did that now. So we have the first resistance for the month right here at 45.9 it looks like, and then we have pretty interesting the central pivot at the same point as last month. So definitely be looking for this as a bull bear sign. So as long as we're under this, I'm still pretty bearish. And then ultimately, I really think that I called out a couple days on Twitter, we need to test 37,000. We actually didn't, so we were pretty close, but I still think we are going to come into this this demand zone here. So I think there's going to be a lot of volume down here. So I am going to be looking for that. And ultimately, I think it would be a good thing if we had a move lower here, because this just happened to play out to these ranges that I watch, which is from 33.9 to 369. I feel like the price likes to move there, and this is a key support. So and then that's just kind of tying into my overall macro view of the market. So if you haven't heard my previous macro view, I think that we are in a fear trade right now. We're going from risk off right now. So people are being safe with their money, and we're not going to be risk on for a little bit here. So we got the Fed meeting coming up, talking about interest rates and stuff like that. But so what we have here is a lot of money just going into the dollar. And then also, if you look at the bond market, it's been pretty stable, a little bit down today. So definitely want to watch this as the bond rates, as this bond ETF goes down, that means the interest rates go up. So we want to make sure that there is volume in helping the bonds here. We want money flowing into bonds, because ultimately what happens is it goes from these dollars back into the stock market. So that's what I'm looking to happen. I would say, we're in a very good opportunity to buy the dip, but I want to see some more red. Honestly, I think that there's still stuff going on with the war. So we're still in this fear trade. We're still in this risk off trade. Now, if you're in oil or defense contractor stocks, you're doing very well as commodities. But I really want to make sure that when we do switch back to risk on, and we will start to see some more money going into the SPY and the Bitcoin and Ethereum as well. So we will keep an eye on that. So just want to reiterate, I hope we do get some more red here over the next couple days. So yeah, that's basically all I wanted to get out to you. If you have any questions, let me know, and I will catch you later.